Good morning, traders, and welcome to the weekend update. I'm doing this a little bit earlier here. I'm doing this on Saturday, October 11th, again, because I am in Athens, Greece. I'll be heading up into the countryside a little bit later today. I'm not sure what internet's going to be like up there, so I wanted to go ahead and get this done. Obviously, Friday was a fairly monumental day, and as I had mentioned in my previous weekend updates, we were in a pretty good uptrend here. If I were to come in and basically draw this particular line on, let me get my drawing tools working here. If I were to come in and look at this trend line on our chart, we were moving along pretty darn well. However, I also have said all along that news can derail this, and it derailed it in fashion here on Friday. The question is it going to be prolonged or not? So we did, as I had mentioned in last week's session here, I had mentioned that if we pulled back, I was expecting to pull back right into that 6,500 range. I didn't think it was going to happen unless some major news event broke, which obviously it did. We did come right back to that 6,550 point, and we'll have to see what happens there because we did break this particular trend line that's been in place for quite some time now. And also, if I look at volume here, it was on a little higher volume, but the volume wasn't as strong as the days that we've had significant up volume. So a little unsure as to exactly what that is going to mean for us. And as we know, in the world of our politics right now, things can change in a flash. If something gets semi-settled over the weekend, if a tweet comes out that things are being backed off of a little bit, there's a number of different things that can happen that would cause this decline to stall. Of course, there's also a number of things that can happen that might speed this decline up. Other countries could now chime in and say, hey, we're not going to honor our tariffs, etc. Again, it's a political event that who knows where that might land. So let's just take a look at our different indexes here. Of course, SPY is going to be virtually the same. I want you to notice, though, that it is still remaining inside this long-term blue channel that goes back quite some time here. So not extremely onerous at this point, but obviously still a nearly 3% dip in a single day, which is certainly nothing to sneeze at. The ES, very, very similar in nature. We notice that it came all the way down to just a little below that 6550 range. Again, an area that I would have expected possibly some stalling or consolidation, and it bounced off of that a little bit prior to the close on Friday. So that was somewhat encouraging. But look at the volume bar here. So on that down day, this volume bar was quite huge in our S&P futures market. The futures markets tend to be traded a little bit more by professional traders. So this tells me that the big money, if you will, is a bit more concerned than your average retail trader that might be trading SPY. If we look at volatility, I haven't looked at this yet. I'm going to guess we're going to see a sizable increase in volatility, and yes, we did. So, but interesting, we come back right to this, what I'll call this consolidation area. I can't draw a very straight line here this morning. It's about 5 o'clock, but we can see that volatility came right back into that 21, 22 range. This green line I had previously drawn as an area where volatility largely hadn't exceeded that in the past. And I think I could actually probably drop that down just a little bit from where it's currently drawn. But the key is that volatility gets up into that area and many times will stall. This is the reason that I went ahead and I started personally on the very limited time I had on Friday, doing a couple little trades that are volatility focused. It's a good time to consider trades like maybe a butterfly or a condor. Of course, only defined risk trades. But at the time like this, when volatility spikes, that's when I can get, as an insurance seller, that's when I can get more premium for those types of trades. But of course, I would only do a defined risk trade in that type of environment. So looking at the Qs, we're going to see similar story here, but this trend line here that has been in place for quite some time, we didn't blow through that on the way back. So that's also somewhat encouraging here, at least for the time being. But it also pretty big down volume day. So those are things that have to keep in mind on this. If we look at the volatility here, my guess is that it might not have peaked quite as much as SPX. Yeah, it actually was a little bit higher, probably in the same range. Now, this whole thing that happened here, those of you that have looked at charts for a long time, you might see things like this from time to time. I'm going to go out on a limb here and say this is simply what's called a bad tick. So somewhere along the line, something got in here that said, oh, volatility was all the way down at 9.2. Well, volatility hasn't been at 9.2 in forever. And these are also probably some sort of bad tick. So I don't pay attention to those types of things when they occur. I consider this whole tail here to essentially be meaningless, particularly on a day when volatility was up significantly. So don't let those fool you into thinking, oh, sometime during the day, volatility dropped significantly. So I don't have a solid explanation for why these are occurring from time to time, but at the end of the day, they're not something that I would pay attention to. We take a look at IWM. Very similar story here, big dip. This one fell out of that channel. IWM, as I had mentioned, has been the weaker of all the indexes. It did come up here to this all-time prior high, which is where I was expecting some resistance to probably come in anyway, some chopping sideways, if you will. And ultimately, if this chopped sideways for a while, or even down where it is right now, if this just chops sideways in a bigger range here for a couple of weeks, this is one of my favorite patterns called a cup and handle. And again, if this chops sideways, I'm thinking that we could get an explosive move out of a handle here at some point in the future. Not too distant future, probably by the end of the year, but of course, that's going to be news driven at this point. We're going to have to see how this holds up. And of course, we're looking at volume here. So volume, pretty significant there, but it didn't peak over this up day. And that wasn't even a huge up day here, but that up day where we kind of gapped up into this channel some time ago and gapped up right near these all-time prior highs. So that had still higher volume than what we have here. So wouldn't necessarily call it a bullish sign, but it's something that gives me a little bit of a hope that if, of course, news fades on this or something gets resolved from the news standpoint, that this should stay in this general sideways range chopping, hopefully creating a handle for me. The volatility index on the RUT, not quite as high as the others. Again, also slightly, I hesitate to use the term bullish at this point, but it's not exceedingly bearish yet at this point. And gold, I don't know what to expect from gold. I would think that gold would probably have moved a little bit higher in the uncertain situation, which it often will. And yeah, it did. So on Friday, we can see that gold opened down here at 365. It closed the day up around 370, somewhere in that general range. So gold also is holding up just fine. And when you have uncertain times, from my day, gold was your safe haven. I will say that many times nowadays, people go to a cryptocurrency for that safe haven. I'm not even going to sit here and talk about that because I don't know anything about it. I just can't wrap my head around how do you value something like that. I can value a company by looking at their fundamentals, which of course gives value to the S&P 500, etc. I know those companies have value. They have assets. They have names that are worth something like a Coca-Cola, etc. I'm not sure. Of course, gold has had intrinsic value since the beginning of time. Particularly as I'm here in Athens, Greece, it's very interesting to see how gold has been used for literally thousands and thousands of years. And I know in current times, younger people consider cryptocurrency to be that potential future value. I'm not here to say it is or isn't. I don't know. I don't know enough about it to make a claim, but I can rely on the fact that gold has had intrinsic value for thousands and thousands of years, and cryptocurrency has been around 15 years, 20 years, somewhere in that general range. So again, at the end of the day, I just can't speak enough on that. So those of you in the alert service, this is one of the reasons that I keep things small in these, what I'll call dicier news cycles. So if I take a look at the current positions in the alert service, they do not look good, okay? But a couple things to keep in mind here. So this trade I put on actually on Friday, about 2 hours before the close, just because I was exhausted. I was jet lagged. I didn't want to stay around until the close to see where it ended up. I was expecting that the market might stabilize in that 2 hour or so before the close of the market. It did look like it hit a point where it might stabilize. So I went ahead, I put this trade on. We see the P&L here. I'm going to go out on a limb. I wasn't there at the close and say, I don't think that P&L is quite right. A lot of times these P&Ls get inflated, if you will, both to the good and the bad after market hours because the market makers pull all their bid ask orders. And so what we're seeing is probably not real accurate. Many times it's going to be about 50%. So this trade could be down 150, somewhere in that general range. But a lot of that is also going to be due to the spike in volatility that, of course, happened as we went into the close and the market continued to tank. If, in fact, things stabilize on Monday and volatility lessens, I will see profitability come back into this, or at least the loss diminish significantly. So that's what I'm going to look for on this one, is a significant diminishment in that. Same thing here. I like the location of this on under the tent. These things have very wide ranges that they can play in. So I really like that a lot. And this is going to decay in this general range. So those are the things that I'm going to be looking for on these two diagonal trades. And I should also say that I closed out, I believe it was 2 diagonals this week, also at a profit. I think those were trades 15 and 16 in a row that were profitable trades. So the diagonals do for a hit, quite frankly. But I'm still, if things settle down right now, I think these could easily turn back to decent, profitable trades. Now, this broken wing butterfly trade. So this is a great trade. In fact, had I had my wits about me personally, I wouldn't put on a second one in the class, or excuse me, in the community right now, because we already have one on. But for me personally, that would have been a great time for me to put some of those on Friday, because when volatility is higher like that, I can often put on a broken wing butterfly that's going to have a higher reward to risk ratio, something along those lines. Let me redraw what I would think I would probably do there. So it would be something along, see if I can, it would be something that would look more like this. In other words, this right wing would be higher, so it would automatically be profitable if our markets continued higher from here. The risk would not be as great. It would be downstream, if you will, quite a ways, giving me another 110 points or so of downside buffer. So all of those would have been good things that would have prompted me to consider putting on a new broken wing butterfly had I been at my desk at home, had I been paying better attention, etc. So right now, I consider the fact that I didn't do that a little bit of a missed opportunity as a trader. Now, what about this particular trade? What am I expecting here? Well, again, gonna have to kind of see how things play out here this next week. But if we get some stabilization here, I think that we're going to see this T0 line kind of, it's not going to be as steep here. I think it's going to, if we move back a little bit higher, I think this is going to regain some of its current loss here quickly. I also don't believe that this loss is probably an accurate reading for the same reasons that I mentioned on these trades over here. So I think that loss is going to be less, again, if our market gets even just a hint of stability and volatility drops out of it. So while I don't like where this is at right now, it also doesn't totally freak me out because we're still under this tent and we're still going to be experiencing decay. And that decay is eventually going to do something like that. And if I am still in this trade, when that volatility starts to lighten, it's going to do something along those lines. So I'm not overly concerned about this yet. If we continue to move down this next week, then yes, I'm going to have to do some things about adjusting this trade, which will probably reduce my risk to the downside. And it's going to reduce my potential profitability here to the upside. That's kind of the standard move on this, but it will flatten out my deltas in that process. And then there's this one that looks like I'm going to continue to battle. So this is the Flyagonal that I committed to battling a while back. And this thing was down $700-800 at one point as a Flyagonal. And I said, I think I can battle this because the markets are acting somewhat reasonably. At one point, my battle had got that loss down to about 350. Obviously, in hindsight, would have been a great place to close it. But I continue to battle here. I'm not, again, overly freaked out yet by this one. I'm not a huge fan of where it is, but I will take a look at this one come Monday and see what our markets bring. If our markets do, in fact, stabilize or move up a little bit, volatility drops out of this a little bit, I think this trade is going to look much better. If that does not happen, the fact that I do now have higher volatility probably means that I can maybe just move this entire tent down a little bit. But that's also a little bit risky because, of course, if you announce, oh, tariffs are off again, I mean, our market could shoot up very quick, very fast. And I don't want to get caught then to the other side, getting whipsawed in this. So this is going to be a play-by-ear situation. And I will also say that this particular P&L is not likely to be accurate at this point either, particularly in a diagonal, in a time spread. It's not going to be good, but it's not going to be quite that either at this stage. And then finally, I can also have the ability, since this is currently a time spread, I also have the ability to turn this maybe into a condor by selling a put spread to the downside and end up with a trade structure that might look something like that. That would be something that I would also maybe consider if I need to early next week. So with that, I'm going to wrap things up here. Those of you that have purchased the Flyagonal course, I hope to have the full thing released in the next 48 hours. Half of it is out there now, ready for your consumption. Those of you that maybe haven't purchased it yet, 15, I think, winners in a row in the alert service. The overall stats on that, after about 104 trades, it's still running 94 to 95% winners. So it has been a phenomenal trade. And just like this one that was put on Friday, when that volatility increases, I got a really wide range on that, from 63.50 up to 67.50, a 400-point range where this can kind of decay in that range. And if volatility again drops out, that's going to actually mound up that T0 line rather rapidly. So even in the current market conditions, I consider this to be by far my most consistently solid performing trade. With any trades like this, with any options trades, really, the time that you will get caught is when you make a shift from low volatility to high volatility and you have trades on, just like right now. But that's the reason that these trades were kept much smaller. That's the reason there were few of them, because volatility was low. If we got a shift like this, it's going to hurt. The opposite is also true. If you put trades like this on when volatility is high, you're going to get a better reward to risk ratio. And when that volatility drops back out, which it usually will at some point, that trade is going to become more profitable faster. So that wraps up the weekend update here. I will still be in the community throughout the week, obviously managing trades, etc. I won't be in there day in, day out like I normally am. I'll be checking in probably in the last 2.5 to 3 hours of the day, and you'll see me in the room. Take care, everyone.